Have you ever heard the term multifamily office and thought, is that different than what my current financial advisor does for me? Or is it just a fancier title for the exact same thing? Well, this video has all those answers. In the next 10 minutes, I'm going to walk you through the exact differences between the traditional financial advisor and a multifamily office. We're going to go through the 6 key areas of your entire financial life, and we're going to peel back the curtain and show you exact differences. Now, why should you stick around for this whole video? Well, I run a multifamily office for business owners, and I've also been a traditional financial advisor. So by the end of this video, you're going to know if you've outgrown that traditional financial advisor and need to upgrade to a multifamily office. The multifamily office model we're going to talk through today is built for business owners with net worth north of $10 million, upwards of $100 million, and the majority of their wealth is tied up in their business. So if that's you today, or you're climbing towards that, let's dive in. Now, before we dive headfirst into those 6 key areas, we need to make sure we understand what a multifamily office is. And the easiest way to explain this is thinking about the CFO in your business. You think about the CFO in your business, they know where every dollar is going. They know where all the entities are, they know where all the bills are. And the same can be said for the multifamily office model. It's not an advisor, it's not a firm, it's a completely different structure based purely on your entire personal balance sheet. So when you think about what a multifamily office does, it's going to incorporate everything on your balance sheet, not just your investment accounts. So when you think about the broad stroke of the difference between a multifamily office and a traditional advisor, it's that multifamily office is an entire team coordinated around your entire balance sheet, not just looking at that one discipline of investment management. And that is where the biggest difference comes into play. When you talk to a traditional financial advisor, they're going to focus on one thing, which is the investment portfolio. When you think about the multifamily office model, this is going to be a completely coordinated structure around your entire balance sheet, including those business assets. Now, when you think about that entire balance sheet, there's going to be 6 key areas that we're going to look at. So let's dive in and contrast the difference between that traditional advisor and the multifamily office. Now that we better understand the structure of a multifamily office, let's dive deeper into each one of those 6 areas. The first area that we're going to look at in your personal financial life is income planning. When we think about income planning with the traditional financial advisor, typically the buck stops with how much money are we making, how much money are we saving, and how much money are we then deploying into the portfolio. That's fine for the traditional advisor. But for business owners with a lot of complexity, we need to take a much more robust approach to the income planning itself. When we think about income planning in a multifamily office, we're going to be looking at all the different entity structures that are out there. We're going to be looking at the privately held real estate. We're going to be looking at the investment portfolio. We're going to be looking at the operating business. We're going to be talking about how much money needs to be getting deployed back into the business versus being pulled out of the business. If we pull that money out of the business, what are we going to be doing with it? Are we going to be buying real estate? Are we going to be investing in the portfolio? But the key difference here is that we need to make sure we understand where we're trying to go from a business perspective. Are we building a lifestyle business, or are we building a business for enterprise value to potentially exit in the future? Those are all key components that you, as a business owner with a net worth north of $10 million, need to make sure you have an advisor that understands the ins and outs of that income plan. So we're not just taking money out of the business and starving it. We need to make sure we're leaving plenty of money in to grow it for the future. The second area is tax planning. When we think about tax planning for the traditional financial advisor, it's this simple. I can't give tax advice. Go talk to your CPA. And the reality is, you might have a great CPA, but you are fully reliant on coordinating with that CPA and then also trying to understand what he is even saying. Oftentimes, I find that CPAs actually are doing really good work for business owners, but they do such a poor job communicating to the client that the client has no idea what's going on. So for that multifamily office model, there's a big difference here. We are the ones that are going to be coordinating the entire tax planning process, working in coordination with your CPA and making sure that we are not leaving a tip to the IRS. Now, what does that look like day in and day out? Well, it looks like coordinating those quarterly tax payments. It looks like running tax projections and then comparing it with your CPA. We're not just going to rely on the CPA. It looks like looking at your entity structure and making sure it's set up in a way to save you the most amount of money on taxes, not only today, but over your entire lifetime. These are all things that the traditional financial advisor is not going to do. And they're not set up in a way to give this type of robust tax planning. And that leads us to our third area, which is risk management. And we think about risk management, This is trying to avoid the boat sinkers in our financial life. And if we think about the traditional financial advisor, we're typically talking about life insurance and disability insurance. And why does the traditional advisor want to talk about those things? Well, oftentimes that's how they get paid. There's nothing wrong with paying somebody to sell a life insurance policy. That's just how the life insurance industry works, or the disability insurance. But we need to make sure we're going well above and beyond that for business owners with these net worths north of $10 million. In the multifamily office model, we are trying to identify what are the boat sinkers and then making sure that our T's are crossed and our I's are dotted. So when we think about this, it's going to incorporate life insurance and disability, but it's going to go well above and beyond that. We're looking at property and casualty insurance. We're looking at your umbrella policy. We'll look at the details of that umbrella policy and making sure that all the assets you own are actually listed on that umbrella policy. You will not believe the amount of time that I've seen somebody say, I'm all set. I got my $25 million umbrella policy. And then I look at it and their house in Colorado isn't actually listed on their umbrella policy. So if something happens on that property, the umbrella policy is actually going to do nothing. And those are the details that a multifamily office is going to pay attention to, but the traditional advisor, this is not taught to look at. Now, when we think about risk management, it's often thought of as an afterthought. It's insurance, it's costly, there's premiums involved. But what I would encourage you to think about as a business owner is this could be the make or break in your financial life. Because as a business owner, if I Google your name, I could probably figure out the business that you run, but probably figure out how big it is. And the reality is that puts a target on your back that we need to protect. Now, that fourth area is estate planning. When we think about estate planning, the traditional financial advisor is going to send a referral to the estate planning attorney. They're going to send you on your way. You're going to go sit in their fancy office. They're going to talk legalese. You're going to say, well, I trust this person because the referral was made from my trusted financial advisor. I'm going to sign the documents and then I'm going to follow their lead. And the reality is that's just not good enough for business owners with a lot of complexity. When we think about the multifamily office model, the multifamily office model is where we're going to sit in those meetings. We are going to take the legalese and we're going to simplify it down so you can understand it. We're going to make sure that the business structure is set up in a way to potentially avoid estate taxes, which oftentimes could be costing business owners tens of millions of dollars if they were to pass away suddenly. And when we think about the estate planning process, this is not a one-time thing. This is a living, breathing document where we're the ones that are bringing up ideas of there's a new estate tax law that's coming into play here. Here's how it affects your business. Here's what we should do with your estate plan. And making sure we're proactively planning from an estate perspective versus reacting one time and saying we're all set. Now, this fifth area is one of my favorites because from an investment portfolio perspective, we think about the traditional financial advisor. They're going to look at one thing, the stock market. And they're going to tell you as a business owner that you should take money out of your business and you should give it to them so they can invest it in the stock market. And we think about the multifamily office model, we're going to be looking at all the different assets on the balance sheet as part of that entire portfolio of construction. We're going to be looking at the operating business, the value of it. We're going to be looking at the real estate that operating business might own, other private real estate that we have, private assets that we might have invested in, like other private equity companies. And then we're going to look at the stock market as well. Then we're going to mesh all of those together in an investment structure that makes sense for your operating business. Too many times, business owners get stuck with traditional advisors and they get frustrated because that traditional advisor keeps telling them to take money out of their business. And that might be the right decision at some point in time, but it is certainly not always the right decision. So you need to make sure that if you are a business owner with that net worth north of $10 million, that you are in a position where your advisor is taking into account your operating business. And the last piece is team coordination. And when I think about CEOs of business, typically they are the team coordinator. They're the one that's talking to the attorney. They're talking to the CPA. They're talking to their insurance agent. They're talking to their financial advisor who's investing their money, but they do not have any time. So if you're watching this video and you're a business owner without any time, well, this team coordination piece is a huge lift for you on the multifamily office side versus that traditional financial advisor. Because the traditional financial advisor is not going to be doing true team coordination. The multifamily office is your one point person. You call one person and they take care of it. You buy a new car, you call the multifamily office and they get the insurance set up. You buy a new piece of jewelry, you send it over to the multifamily office and they get it added to your insurance. April 15th rolls around. Well, we need to make sure that the taxes are filed and an extension is filed. You're not calling your CPA. You have one phone call, the multifamily office. And the reality is the traditional financial advisor oftentimes says they do team coordination, but this is a huge gap that we see with traditional advisors because they're frankly just not built to do this. They have hundreds of clients and it would be impossible for them to do team coordination. So if you do not have a lot of time and you need somebody else to coordinate your entire financial life, That is one big lift that you need to be thinking about in the multifamily office model. Now that we've covered those 6 areas, who is this a good fit for and who is it not a good fit? For business owners who want to continue doing it themselves, they enjoy the team coordination. They enjoy being in the weeds of all the different things going on from an insurance perspective and a tax perspective, and they don't want to delegate it. Well, that traditional financial advisor might still be a good fit for you. But if you're a business owner that has very little time and a lot of financial complexity, the multifamily office model is certainly something that you should be looking into. Now, if you've gotten to the end of this video and you're thinking, I still have questions, I'm not sure if I have enough financial complexity, is the multifamily office model really right for me? Well, I'm happy to have that conversation with you. In the description below, there is a link where you can schedule a call with me and we can just walk through the multifamily office model and see if it's potentially a good fit for you or if you should stay with a traditional financial advisor. If you enjoyed this video, please subscribe to the channel. We're going to be putting out more and more content just like this.